I'll start sharing my screen. Please kindly confirm you can see my screen. Kindly confirm
Yes,
you
sir.
can see.
I see it.
So today is 27th day of our class, and we started this class talking about engaging the markets, Forex, futures, CFD, and here we are still on the matter. And I can remember one of the things we emphasized strongly is the top-down analysis that shows us mapping or zoning of the price movements starting from higher time frame, especially the 1 month, sorry, not 1 minute, 1 month time frame, which is important that you and I pay attention to what is happening around the price vis-a-vis the higher time frame. First of all, I think, and I know it is from the 1 month time frame that this particular zone was marked, because that is the lowest point the price dropped before it began to rise. That is from 2624. We are talking about gold right now. Then this is the highest point in the market where price has ever gone to in the most recent time closest to the market. So we call it the all-time high of gold, which is around 2742. Then the next thing we want to see here is just a moment, please. Just a moment, please. We'll continue in a short while. So it's very important for us to do these three markings: the highest point relative to the current price, the lowest point relative to also the current price of the market. Very important. Then if we drop down to, there's something I'm trying to notice here, this particular zone here to balance well. If we drop it down to weekly time frame, we are also able to notice areas that are of interest in the market on the weekly time frame. For example, this area we mark initially for monthly, it still have some points up here, so we can still, there's room for adjustment, for some adjustments on that area, because on the monthly time frame is appearing as shadow or as feather, but on the weekly time frame is relevant. So we adjust that zone. Then a new zone popped out here where we decided to mark like this on the weekly time frame. A new zone popped out here. We need to pay attention to this particular zone. It was a lower high that was created after the all-time high at around 2715. Then also very importantly, we had another high created most recently in the market. We thought this market was going all the way to the top. How come we see it now facing down? A new high has been created on the weekly time frame. Permit me to just mark it again with this particular guy like this for now, please. Permit me for now. If we have to remove it later, I'll remove it, because we are seeing this particular box and want to know what this box is standing for and what we are doing with this box. We might have to remove it if it's not necessary. Then if you look downward also, you notice that this particular area is marking the neckline of this W reversal pattern here, this particular resistance level, and there's a support level for the monthly we can adjust to fit in like this. So we have a very, very important area of concentration now becomes 1, 2, 3, and 4. So every other one you see outside that area will not really be relevant for us for now, because we are trying to get an analysis, the direction of the market within the next few hours, the next few days. So we call that day trading. So if you are trying to get a day trading perspective, you are not so much worried about the long-term projection of what price has been doing so many years ago, or the long-term projection of what price will do in the next few years to come. So you just want to look at what price will do in the next 24 hours and the next few days following it. So you want to pay attention to most recent price movements. If you drop it down to daily time frame, you will notice if we shrink a little bit so we can see more data, we can see this particular area we marked on the weekly. We can still adjust that area. We can adjust that area to fit in what we have. We have a particular high here, then we have another high here. That gives us an idea saying that it's an external W pattern, right? So double bottom, but then this one pop out more. So we have something like a sweep of liquidity to the upside before the price drop. It's important that we take note of this. When price drops from this height, falls down massively before it starts going back up again, this area becomes old low, and price tends to react to old low and drop down continuously from old low. Take note of that fact. We are on the daily time frame, and here on the daily time frame we can also change back to candles so we can see what the price is doing. But for general view, we can say clearly that we see a drop on from an old low, which was this one. We see a drop, a massive drop. Then we see price struggling to go back up, struggling up and down to go back up to where the drop fell from. So that's what is currently happening right now with price. And we saw price came in here and decided to drop from this part. And that's significant and that's important. If we change back to candle, we can take notes and we can have more details as to what is happening with that price pattern. So if you change back to candle, this is what we see. We notice most recent movement in the market. We notice this particular move from down to up to this support level here and drop down, created a new neck around this side. That neck actually closed. That neck actually closed around this side. So the drop came here, closed here, went back up, sweep this previous high, sweep it so we have a BSL, and drop massively and broke this structure, change of structure, broke the structure. This is daily time frame. So this movement, this particular movement signifies a strong bearish presence within this area. Signify a strong bearish presence within this area, this particular movement, because it breaks a structure to the downside. Now, if we have a pullback, returning us to this same candle where one of my friends, Smith, said this candle is responsible for this damage to the downside. What is the damage? The damage here, according to my friend Smith, is that push that broke a structure, a significant structure. Price came down, formed a neckline that couldn't go through. Price struggled, find its way going back to the up. But this particular candle sponsored the movement 1, 2, 3, 4 that broke this structure. So this candle becomes an order block candle. When price gets into this zone of this candle, price should react to the downside. So, and we saw that movement. We took note of this movement. Price began to struggle, got back exactly into this particular candle where it dropped from before. And what we noticed there was another bearish engulfing. Just like this one, we had a bearish engulfing, price rallied down and broke structure. Now again, we have another bearish engulfing. So we are on the daily time frame. So we say we consider the daily bias. Now we have a bearish engulfing. Price tends to, from that bearish engulfing, drop down continuously to go down and break this this new low that was created after that structure. So giving us something like a new high here, then a lower high here. This lower high is supposed to create now a lower low, because a low was created here, a lower low was created here. So we're expecting a third low to be created. So we'll end up having something like this. The first low giving us a new high, then giving us a new low, then giving us a new high, then giving us a new low like this. So this is what we expect to happen. That's the traditional price movement, in a downtrend. So if that be the case, we're not looking at this bearish engulfing to be our reason to sell. because the candle closed in bearish engulfing yesterday, Monday. So, but before we sell bearish engulfing, remember, we say we need to allow the price to pull back so we get an entry after the bearish engulfing. So if you go back to H4, you will be able to see that pullback that we should expect. The whole of this movement of 1, 2, 3 on H4 is that daily candle that dropped down yesterday, Monday, and which we took a trade yesterday from the challenge group. Those of you part of the challenge, $10 to $10,000 challenge, you saw that trade we took, and we head away straight to profit on that particular position. Then we dropped down, not only dropped down, we dropped down to break a structure. There's a particular structure here which is on a smaller time frame, this particular side, 2663. That structure was broken to the downside. That resulted to the bearish engulfing. Now, the next thing after the bearish engulfing is a pullback. We need to see a valid pullback. A valid pullback is any pullback that goes above the candle that broke through. What am I saying? I'm simply saying that a pullback of this nature is valid. This candle broke structure to the downside. But this candle is not the lowest candle that came down. Another candle came up again like this, but could not go and close below here. Rather came down and formed a lower swing, meaning that the move is from here to here, not from here to here, as so many traders may think based on color, not the color. If the candle that came in here, if the next candle, which is the green candle, could not go above and close above this last candle, it simply means that this move is actually from here down to where we are here on the green candle. So this green candle invariably is not a pullback candle. Since this green candle is not a pullback candle, after the close of this candle, we shouldn't look for entry. We want to look for entry after a valid pullback. I have a complete lesson concerning pullback on my YouTube. If you go and check valid pullback or how to trade pullbacks, you will see that training, that particular class on my YouTube. I think I did that class January last year. So the next candle that played through, this is now the low. So if any candle goes and close above the low, is now our valid pullback. This is the new low that has been created here, this one. So if any candle goes and close above the high of that particular low, then that is the valid pullback. So this particular candle close above or even spike above, then this particular candle is our valid pullback. So after such a valid pullback, we can now begin to look for entry. That's what I'm trying to say. I'm saying all of these pullback issues just to tell you when we are supposed to expect an entry after a breakout. If we have a breakout, you need a pullback. What is a valid pullback before you begin to expect an entry? Because sometimes this pullback can just come a little bit and continue going down. Or sometimes the pullback can come so much deep before they start going down. That depends on the last candle that made that swing low. That last candle that made that swing low will determine which candle is a valid pullback. Now, you can never ever be 100% accurate at identifying which candle, where the price will turn from and where the price will not turn from. You cannot be accurate on that. You just have to do your best based on what you have practiced and based on what you have discovered in the market. So, but what I've said so far is that if this candle is the last candle, if this candle is the last swing that we had coming to the downside, then it means that any price that goes above this candle is our valid pullback, e.g. this one. So this is our valid pullback. After the pullback, we didn't enter. We have to look for an entry after the pullback. So now that gives us our trading range. Remember when we started this class many days, I say many years ago, many days ago, since last year, we started from H4 time frame. If you remember the simple trading strategy, we started from H4. We usually mark the high of the zone, the high of the most recent zone, and we also go ahead to mark the low of the most recent zone. If that is done, we describe the high and the low as our trading range. If this is the high and this is the low. So we expect the price to go back to give us an entry from high and low. So with that, vis-a-vis that, we can say that the best entry will be gotten from a premium level. The best entries could be gotten from a premium level, which is a level somewhere around this particular zone here. But price seems not to be coming there. Price already created a pullback. So what do? We have to look for forced entry and tight stop loss. But if we see price from this place now go back into premium level and give us a reason to sell, that will be a most conservative way to sell price to the downside. Please get this clear. Always remember the premium discount level. Always remember it's very, very important when it comes to determine entry level or entry places where you're supposed to enter, places where you're supposed to exit. You want to enter from premium level. So if this price could have dragged us up all the way to this particular area where we have a resistance here and give us a setup at this area, is the best area to look for a sell, because the best stop loss will be behind this guy. So no matter where we enter, you still see where our stop loss is far away. So if you measure an entry we get from the setup from this side to the stop loss, we'll be seeing around 127. But an entry we get from the setup from where we are right now is an entry that is giving us around 243 pips. So you see the danger of that kind of entry, right? So, but then, however, let's proceed to see where we can get a forced entry from this kind of setup. Remember when I was explaining premium discounts, I told you if this was a football pitch and this is home and this is away, I asked a question. I said, where will be the safest place? This will be in the midline. Where will be the safest place to kick the balls? Many of you said in front of the goalkeeper. That's the best place. One. Where will be the next best place? Many people say after the goalkeeper. Two. That's the next best place. Where will be the next best place? Many people say the middle line. Three. The more you come down, the more difficult it is to get the best position. The more difficult the entry is, the more riskier the entry, the more aggressive the entry. It doesn't mean that you cannot get an entry from here and trade to the downside. You can, but the entry becomes more riskier because price can still go up before coming down. That means your account will suffer. Price can still decide to go up before it comes down. Your account will suffer. But if you get an entry from here, price have nowhere else to go other than this place, then come down. So if you are entering here, your stop loss is a little bit above here with some gap. If it goes up, it comes down, so you are more safer, which is why we always say the OTE, optimal trade entry area, is the safest place to enter the market if you want to sell or you want to buy. So please take note of that. So in this, with all of this now, I think I can just proceed because there's nothing more I can do here. I'm looking for a forced entry, why we actually took this trade, who called this trade, and why I'm still in this position. It has nothing to do with H4 time frame. Based on H4 time frame, our best entry is around 68.88, 26.88. Around that zone, that's where we have our best entry. There's a resistance around that zone, a monthly resistance there. I think there is one small fair value gap or something like that. We'll see it when we go down. So if you come to 1 hour time frame, you might see the reason, or you might see more reasons why you can do forced entry, why you can do forced entry, or why you can find an aggressive entry. So that same move we're referring to is this particular one. That is the H4 bearish engulfing. Then the pullback we're referring to, which was a nice pullback, is this particular move. Then all these guys here were trying to give us a setup to go to the downside. So did we get our entry from these guys? Let's find out. Let's find out. So if I begin to look now from this movement, if we want to go down, I would be referring to this particular candle as the order block candle, this green candle. If this candle becomes the order block candle, because after this green candle, the next move we saw broke structure. So this green candle here becomes our reference candle. So we are looking for entry based off this green candle, saying that we do not want price to close above this green candle. If price close above this green candle, then we are no longer going to be in that position. We exit the position because it will be heading all the way for this zone, which is the original sell zone. So you see the reason why we pick this candle is now coming out from 1 hour time frame. So if we pick this candle, this place now becomes our trading zone. Here is the high, here is the low. So we are looking for entry from the premium now down to the discount. So you see, but the higher the time frame, the stronger the analysis. Now we are coming down to 1 hour time frame. The analysis is now weaker, right? So here in 1 hour time frame, you'll see what has happened. The price from the top fell down to the bottom, created a low. It went back to the up, created a new high, which is now this particular one, but could not close above this this green candle that was responsible for this damage, which is the order block candle now for this particular break of character, not break of change of character, is market structure shift to the downside. This particular move that went to the downside started from this particular candle. So with that, if the price goes back to this candle, we'll look for entry around this place, provided that price did not close above this price. Price that was going back did not close above this candle high, which is 26.75. So you can see, you can get all those accuracy from that. So if you look at this place, you see two candles here, a bearish engulfing, giving you a reason to buy. So this bearish engulfing now is another reason for us to buy if we get a pullback to the upside. And I'm sure this one can just go a little bit by the side and bring it down here, because we've got an entry here. This is a longer time frame, longer time entry, so you can understand. So this is a bearish engulfing. A pullback into the bearish engulfing will give us our entry to go to the downside. So that means my new trading range has changed from where we were to this guy now. So we are from support to resistance. We are coming back to support, but then price went back again to give us a nice entry. Something like looks like somehow a W pattern, but we'll see it clearly when we go to lower time frame. So when we go to lower time frame, this is our base, this is our roof. Price drop, then price went back. It did not drop to our target level, so it has not completed its movement, right? Price went back. Now the point is this: if price closed above this high, our structure has changed. Our sentiment is now bullish, not bearish again. So we keep marking until we get the final entry. Because on higher time frame H4, we saw an opportunity to sell. But we want to know from where exactly are we going to sell? Do we just press sell like that? No, we have to look for entry. Keep refining until you get the final entry. So price moved from this bearish engulfing low to create a new pullback high, then dropped down but couldn't come to the target, went back. So far the target has not been met. That move is still valid move. Now price is trying to go back. If price close above this resistance, it means that our range is no longer valid. What we expect is a pullback, break of structure, pullback, then entry to the upside. We'll be going up. So we'll be expecting the price to change direction like this. We're out of that price. So we're not going to stay there. So that is one. So number two, if this place is our high, price came down here, we see something like a break of structure here. It's happened here. Yeah, I see it clearly. It's happened here. So look carefully and smartly. Look smartly and use your eagle eye. You will notice what I noticed. Look at this. From this to this guy, there is a break of structure here. Let me show you clearly so you see, and change this to 2. So there is a movement to the upside. There is a push to give us the neckline here. We usually can mark our neckline like this. It's not a problem, but we can also mark like this. It's not also a problem, all the same. But if you mark like this, it's still more reasonable because price could not close below that neckline. Then price went up and could not go above. It stopped inside. It stopped inside. It couldn't form a new swing to the upside. When we have a situation where price could not form a new swing to the upside and price dropped down to break structure, what do we call such a situation? Please, somebody give me an answer. Listen. When we have a situation whereby we have a high and price dropped down to neckline, break structure, went back.
Breaker block.
Not breaker block.
Okay. This one is W pattern.
Yeah, there's a name for it in the ICT 7 ICT reference points. When there is a failed swing, the price is supposed to create a new swing, but it didn't create a new swing, a failed swing. It created a neckline, went back and could not create a new swing. It rather created a failed swing. So what is the professional name for a failed swing?
Oh.
I think it's double top. Double top, sir.
ICT reference point, we have 7 of them. There's no double top as part of ICT reference point. Double top is a candle price pattern.
Okay.
Rejection block. Rejection block.
Rejection block is where you have so many feathers of candle, pia, 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 and the longest one is the rejection block.
That's candle responsible for change.
Help us.
Help
us.
There are only 7 of them. You have to remember it. There are 7 institutional reference points, 7 of them. You've mentioned breaker block, I said no. You mentioned rejection block, I said no.
Okay.
Mention
Other blocks, sir.
Other block is the last candle responsible for
the change of market structure.
Change of market structure is not institutional reference points.
Okay.
Let me show you other block. See other block. This candle is under block because after this candle formed, price dropped down and broke a structure. And it's even a very highly valid order block. I'll talk about it now because after the order block was formed, a fair value gap was formed next to it. And after the fair value gap was formed, the price broke. The 3 candle 1, 2, 3 broke the structure. So we have a valid order block here. So what I'm looking for is, I'm looking for the name given to institutional reference points where we have a failed swing. If you have your notes, you can check your notes. What is another name for a failed swing? Among the 7, okay, mention all the 7 institutional reference points. Apart from order block, apart from breaker block, apart from rejection block, mention the others.
We have a liquidity gap.
There is, of course, you know, this one is not gap. A failed order block, a failed swing is not gap. You know that already. So
okay.
Not apart from gap.
We have fair value gap.
And you know a failed swing is not fair value gap apart from that one. So which one is left?
We have order block.
You mentioned order block, it's not it.
Yeah.
You mentioned fair value gap, it's not it. You mentioned gap, liquidity void, it's not it. You mentioned rejection block, it's not it. You mentioned breaker block, it's not it.
Okay. Old high, old low.
Not old high and low is the last one. What's the last one?
1, 2,
mitigation block. Mitigation block. So what happened here is price formed a mitigation block. There's nothing special about it. I just want you to remember. I'm just trying to do revision with this analysis, touching so many things. So it's also a typology of double bottom because we have a neckline that was broken. Then, but the exact name for it is, somebody say inside W. Yes, it's an inside W, but it has a professional name called mitigation block because the price failed to create a new swing. So anytime we have a failure of a new swing, we call it mitigation block. It's supposed to create a new swing. This is a swing. It creates a new swing before it dropped down. It didn't create a new swing. It rather dropped that swing inside. It rather dropped that swing inside. So we now say what we have there is a failed swing. After that failed swing was created, price dropped down and broke structure. So that place is very, very key and important for us. We only want to enter at key areas. We only want to find key zones to enter the market. Only key zones. We don't want to enter the market at areas that are not key. So we are on 30 minutes time frame. We found a key level on an OTC area. You agree with me that if this place is our high, this place is our low, then our OTC area becomes where we are right now. Becomes our OTC area. So if we're having OTC area, we have a mitigation block here. We also have an order block. This mitigation block is also an order block because it went down and broke structure. And it's the last candle before this damage was created. What do I mean by damage? Change of market structure shifts to the downside, breaking of this structure. So this is a breakout structure. This is an order block that created it. So price goes back to the order block. This is where we get our entry. Price goes back to the order block. This is where we get our entry. After the order block was created, tested, this bearish candle was formed. The next candle becomes our entry here. And that entry came as low as this point. Because from this entry, let me show you what I mean. I actually took this trade. The first one took me to stop loss. That was the one, this particular one. Let me show you. Yeah, I took this trade from here. It took me to stop loss by a small tiny pips. So when I now notice what happened there, that we entered a mitigation block area, which is an order block area, and we tested it, spiked through and created a bearish candle. The next candle after that was my entry. I was able to get an entry from it, and my stop loss was far away. I got that entry that dropped me down. I think there's also a news during this particular time. It was around the news period. So, and I dropped down and recovered back the $10. It was that $10 from Chima FS competition. So that was a trade that I used to recover it. So after that recovery was done, from here down to where I exited, I can't remember, but the moment I saw $10, I exited the market. So after that recovery was done, the next thing that we saw here, that a new low had been created here. If a new low had been created, remember that this high have not been violated. So this zone is still valid. This other block have not been violated. So this other block is still valid. This low have not been reached. That means this structure is still valid. Until price comes down and close below this place, or test it or kiss it, then we still have a valid structure to the downside. This pullback, this bearish engulfing H4, the pullback is still valid until price comes below this place. So always remember that. So now we have that push to the downside. It wasn't complete. Price rejected it and went back very quickly. Why are they rejecting it? Why is the price going on massively like that? Number one, this is gold. Number two, there are some sellers that have not entered this market. They are trying to push price back so that they can load those sellers. Because you'll notice that from higher time frame, the first set of billionaires, they entered the market and they dropped the market massively in favor of US dollar. Then the retail traders tried to push this market. No, this is take profit, I guess. They took the profit, then retail traders tried to start bringing this market down. But these are also the market makers, again, all the billionaires, again, coming in with large candles to drag this price back up because they need to load in some more entry, and they have to do that at a comfortable premium level before they sell the price down. So until this order block is broken and this high is taken out, we are still going to be looking for our bearish push to the downside. Now, also remember that even if we violate this place, even if this place is violated, even if price close above this place, we are only going to close our trade. We're only going to close our trade in a small loss, but then our next entry will still happen again. Where? At OTE area, the original OTE area for H4 time frame to the downside. So that will be the next play that we expect. If price could push, break, and go above, then we'll look for a sell from the higher side, which coincides with the H4 setup in terms of premium discount level. Premium discount level is called PDRA. Always remember that. Then, if you leave that part alone and you still come back here again where we are, you notice like where I stopped, I said this is still valid. This sell opportunity is still valid here. So what we can do here is to drop down to lower time frame again to refine, to look for our structure and look for an entry. So we are done with this guy. So what we have now will be this is still the highest point in the market, this particular candle order block. So we don't want candle to close above that order block now. And then if that is our high, our new low becomes this one. So this is now our new low. So we now have a new trade, what's it called? We now have a new range, trading range. Thank you. Trading range. Price drop from top to bottom because we turn down to smaller time frame, our range will come down smaller. Now, remember, I always say this: the lower the time frame, the weaker the analysis. The higher the time frame, the stronger the analysis. So all these smaller time frame analysis looking for entry, they are weaker analysis compared to the higher time frame. So the higher time frame always wins. So as far as we are here, we are only looking at this place as our highest point. If price close above this place, we have what we call officially change of character to the upside. So we'll be looking for opportunity to get a breakout, retest, and continuation to the upside. But until that happens, we continue to remain bearish in this market. And we have to be bearish because the H4 has a bearish engulfing, and we are bearish. Generally, on the order flow, on higher time frame, we are bearish. On the daily time frame, we are also bearish. So we want to look for bearish opportunity all through anytime we find it. So M30 is still bearish. M15 is still looking bearish, but we are looking for an entry. We didn't find an entry yet. So this pullback to the upside is our first attempt to go above. They couldn't go above. Because they couldn't go above, they now form a new high for us. This new high they form for us, they come down here to form the neckline of that new high. Then this pullback is going back there to go and test that, that zone that they created now on smaller time frame M15. So if that zone is now violated, it means we are out of M15 officially. We have to look at higher time frame. So this is now our new trading range. Trading range M15 from here to here. So if M15 is broken to the upside, then we are in trouble. We can't be in this trade again. We watch M30 and H1. If H1 is broken, we watch H4. H4 is violated, that bearish engulfing, we're out of the game. We are going all the way to the top. So here we are now. On this place, we have a move from down to the top side. From the top, we have a pullback to neckline. From neckline, is trying to give us a special entry. Is there any place we can look and look up to in terms of our entry? That will be here to here. This is going to be a break of structure that gives us the neckline. And this is engineered by this candle, this last candle that was responsible for this push to the downside. 1, 2, I told you about pullback. This is a valid pullback, actually, this one. So if this is a valid pullback, then the push will be this one. So we expect the drop from where we are right now. But then this is still remain the high. So this high started the move to the downside. Then this is a pullback. All these places where we are right now is okay for price to drop down, but we can hold and wait until see what happens to this zone. If this zone is not broken, we see a setup, we can take that setup. For me, I think this looks like we are good to go for a sell, but then we need to look for a reason to enter. I didn't see any fair value gap. 1, 2, 3 is a fair value gap. This place here, there's a fair value gap here. And price already closed above, no, not above. Price respecting that fair value gap. 1, 2, 3 is a fair value gap. Price already slightly close above the fair value gap, or let's say at the teeth of it. And it's not supposed to close above. And if that happens, it could drive price to the upside possibly. And if that could not happen, if we have a setup from here, we could bank on that setup and join the sell move. But we have to also be wise, because this is a massive push. This is a pullback. This is a bullish engulfing. So we have to be wise and smart. We want to see candle setup for us to go lower. Fair value gap is violated if this candle close above. We take out this, remove it. And then other block will be this particular place. And we can even term this place rejection block, because we have 1, 2, 3 candles gathering here, rejecting this particular zone, which is also other block of higher time frame. So this place becomes rejection block. So price supposed not to close above that rejection block. If price close above that rejection block, end of story. We are officially bullish as far as 15 minutes concerned. We go to M30. If we are still bullish, we continue. If we are bearish, we start looking for entry. So what we want to see here now is price to go here, not closing above this guy, but coming down to form any bearish engulfing we find here. We enter. After the bearish engulfing, we go in. Once we go in, our take profit is down to 26.59. So that is end of story. Any bearish engulfing we see on 15 minutes time frame, we enter for a short and we take it down. Now, with all of this noise I have made so far, the best time we should see a setup like this on M15 is by 2:30. Another best time again we want to see it is by 9:30. Another best time again we want to see it is Asian session in the night. So every other time you see it, it could manipulate you, it could set you up. You want to see the setup form during the kill zones in terms of time now. So I think I'm going to stop here and divert very quickly to Naga. Please, while we are diverting now, I want to call your attention towards question. Please always drop questions, even when it's not class, always drop questions. So when I see your question and your feedback, I can set up classes based on your question and your feedback. Now, I just want to explore Naga Broker for the benefit of those of you that have gone through this course from day one to the end. Why we are showing you this is because it holds a lot of leadership and continuity variables and values that could help you as a trader. Number one, when you sign up on Naga, you automatically get a referral link automatically. That when you share this link, of which you're supposed to share the link, you are going to be paid as people are registering, depositing, and trading. Every single trade pays you. If you scroll down, you see when I started sharing this link, 1st of January, I've shared so far 23 of this link. Every blessed day, probably around two links were, 2 accounts were created averagely every day in the last 14 days. So my year have started very strongly. So I encourage you seriously that when you get your Naga link, ensure you share that link like no man business. Do it like Chris. Every day, give yourself a daily target of at least 1 or 2 every day for 30 days, for 60 days, for 90 days. I bet you any link you share for 90 days and you give yourself targets, after that 90 days, that link will pay you for 90 years. As far as that broker is regulated, that broker is a license, that broker is long-term, is solid, then as long as that broker lives, as long as that broker is there, all those links you shared, 90 days, as long as those people are active traders, you will continue to benefit every day for the next 90 years. So you don't want to sleep on this opportunity. You don't want to leave money on the table as a trader. You want to get your link from Naga back office, scroll down to where you have refer a friend. You will see this page, pick up your link and share it every day like your life depends on it. The next thing I want to show you on Naga is when you go to your profile area on Naga, you will see your name, your country, you will see your win rates, you will see your followers, you will see people you are following, you see your visitors, you see people you are copying or pages you are copying. You can even write about yourself as a trader. Write something about yourself so the whole world can know you in the Naga platform. So the whole global platform of people using Naga can know you. So you can pitch your tent and put your mark on the signs of time right here on this page. So you as a trader, as a professional trader, you need to be known. You cannot light a candle and put it under a bushel. You cannot have a shining star and cover it with a calabash. You have to put it there for people to see. So write about yourself, put it there under your profile there, put your nice picture there, represent Nigeria. Then if you have something to say about trading, come and post it here. Post your picture, not your picture, please. A picture that has to do with trading, probably your own analysis and what you think, and you are asking traders to comment on it. Post it there. There is a full Facebook page inside your back office on Naga. So you post it there. What you are doing is called social trading. You are trying to socialize. You are trying to build a community. You are trying to create awareness. And this is what you need as a trader, especially as a beginner trader. You want to create a presence for yourself under your feed. Under stats, it will show automatic your statistics about all your trading habits and what you are doing in Naga. Then under open trade, it will show if you have any open trade on Naga, it will be showing here. Everybody can see your open trade. Once your profile is open, people can see what you are trading, where you are, what you are doing, how far. They will get information about you and people can do business with you. It makes you transparent before the whole world as a trader and people can really see your track record and strike deals with you from all over the world. So if you go down here, upload track record. You can decide to also upload MT4 or MT5 track record so people can see what you have done on other platforms. It can be done here. VIP levels, you are promoted from level to level, so you will be seen and you'll be known in Naga based on your level. and you get advantages for every level you go. Then all the trades you have executed on Naga can also be shown here. No trading data available. Thus, this trader did not open any self-initiated real money trade so far. So if you place any trade, you will see the records are there. People will see your profile every now and then. So you say update cover photo. As a Facebook, you have a Facebook back cover. I need to update my own. I will do it. Then there are several other things I need to put on my profile so my profile can be valid. Confirm your email address, fill in about me section, confirm your phone number, upload your first profile picture. So all of these get a verified profile badge. Be displayed on the leaderboard, get copy premium, and earn trust. So if you earn trust as a trader, many people will do deals with you. Many deals will come to meet you from different parts of the world while you are doing what you are doing with your small account of $100 or even $50. This is very important. Very also important is the feed. On Naga, there is a feed, like I said earlier, that has a full Facebook. Apart from what you can do, you can also see what other people are doing. You can hit like. I hit like this afternoon. And apart from like, you can also comment. Look at me. I commented here. Looking, GU, looking. I think this grammar is not too strong. Anyway, leave it like that. Looking at GU going to the looking at GU to joining the flow later today for this week. So I drop a comment and I can even hit like on my own comment if I want. So a full Facebook feature where you can like, comment, and share is here. I commented on somebody post which she posted 5 hours ago. So you can make this place interactive for you and your community so that everybody coming here can socialize within themselves and everybody's a trader. Somebody dropped a chat of GU here some few days yesterday. From which country? From one of those countries there. So, and he was saying that there's a key level support zone on weekly time frame, and the price can bounce up to the upside or bounce down to the downside. He talked about it here. He wrote some stuff there. So you can go read about it. So seeing signal or trade idea is not strange or it's not difficult anymore. You can get to see people who are doing, and you can investigate who are the people sending it. You can check their profile to see if they are good, if they are weak, if they are poor, if they are average. You can see all of those data from the social media area of Naga back office. Another very key important area now is the trade. Under the trade, you can see all the assets you want to analyze. For example, we just analyzed gold. Let's look at, let's say, BTC USD. BTC USD is another asset that a lot of people would like to be trading in the recent time. Vis-a-vis Donald Trump going for the White House 20th, and so many news happening up and down. So if you come to the daily time frame, I want to remind you. I think I mentioned before that the trading view portal is on Naga. So, and it's an exciting thing to see that the entire trading view is being brought down into the broker platform. You don't have to go to trading view outside to look at trading view before you get trading view. You can actually see trading view from inside the broker platform. So this is very, very interesting and worthy of note. It's important that we mention this and say it. It's here. You will see good. Let's say good is here. So we have the trading view portal right here on Naga. So if you have the trading view portal on Naga, you can do all your analysis here. So this is the monthly time frame on the daily. You can decide to say, okay, I have the daily time frame. I beg your pardon. It wasn't loading the monthly one, so I quickly rushed down to the daily one. So everything you can do on TradingView, you can do here because it's the entire TradingView. You can even expand the screen and do your analysis right from the back office. So you don't have to go somewhere else before you do that. You drop this at the high there. You drop this at the low. All those copy and paste feature of TradingView is here. So there's a monthly low here where price came and kissed before price started going back up again. So this is the top, this is the bottom. We are okay with this top and bottom. Sometimes we mark the mid-range somewhere around here like this. We mark it. It's very important. Then sometimes also this in-between guys, we also mark them, take note of them. These guys that are former key levels, we mark them. There's one here. There's also one here like this. So if we go down from daily time frame to, let's say we drop down to 4 hours. 4 hours. We'll see clearly what's happened with Bitcoin. 4 hours. We see clearly the zones are here. 4 hours. The zones are clearly marked here for hours. So I can escape, come back to candles. So I see the zones. The most important area for me is this push to the downside, then this activity before we start going back up again. I can do like this. I can expand the screen to do my analysis further. I can see this. What I can say here clearly is that this is a daily zone. I can drag it to the top side to cover for this whole place, including all of these rejection blocks. Then price dropped down massively and came down to this monthly support level, which is the monthly demand level. So if I look to the left-hand side, I see that that side is obviously and arguably so many times hit support level. Price has been coming here, rejected, coming here, rejected, coming here, rejected, coming here, rejected, coming here for this is last time now. It's by way of BSL. BSL. Let me show you what it did. Kissed this place BSL. Sorry, SSL, not BSL. Here versus this place like this. So it's called the SSL, sell side liquidity. Let me expand it to show you better. No, expand like this. So we have this. We have this, and we also have this. This is also an SSL. Sell side liquidity sweep happened yesterday. So whenever we have something like that, these are all so many lows gathered here. Then we have first BSL, SSL. We have another SSL here. Spiked it and created a pin bar, rejected it. After this rejection, people began to look for entry, a pullback, a valid pullback, and an entry. You will see that on smaller time frames, say H1 or something like that. So they began to look for entry to the upside. And a lot of people got entry and they entered this trade. I missed this trade. I think I only got this particular one when it came back here, old low, based on old low. I saw it and I picked it up and I made some money with it. But I didn't see the entry here, so I missed this trade. Now what we have here is a W pattern. A W pattern has been formed here, and price has broken structure to the top side on Bitcoin. So that means we now have something that looks like this. On Bitcoin, the structure has broken after the rejection to the downside. The massive move from that downside all the way to the top has happened. So this becomes our, this is not something. This move to the upside, then this becomes the last candle to go down, this one. It didn't break the structure, so we can't even say breaker block. We can't call anything breaker block. Structure was not broken down here, so there's no breaker block. It didn't break anything. It didn't block anywhere. So except a structure was broken, we can't say anything here is breaker block. Nothing is breaker block. We only have a change of character or market structure shift to the upside. Then a nice pullback to give us an entry will be what we are looking for. And the last candle responsible for this push is this particular guy. The whole of this guy, but it's still vague, so we can go down to look for the main candles who were responsible. The main candle responsible for that damage is this particular candle, this one. So entirely we can say, let me look for, I didn't see what I'm looking for. We can say this particular candle is what we are going to watch out for. That will be our entry candles, if price can come back there. And if you go back to H4 to see if we have a fair value gap, yes, we do. We have a fair value gap, which is 1, 2, 3. So this place, again, is now a fair value gap in front of the other block. But I prefer to use the other block, so I'll take out the fair value gap. So it means this other block is a strong other block. Number one, it rejected a key level. Number two, it pushed further to break a structure. Number three, it has a fair value gap in front of it. So it qualifies to be a solid reference point, other block that we can use for our entry. Therefore, if price pulls back, probably tonight, into the other block, then we can have an entry. What I simply mean is if price can just do its thing and find its way to the downside, let me show you what I mean. From here, do whatever it wants to do. but come down. The moment it picks this other block, we look for our entry on lower time frame. We look for our entry on lower time frame. If we see a bullish engulfing H1, we can take it. If we see bullish engulfing M30, we can take it. We can look for our entry, smaller time frame, another bullish engulfing. Then we take it to the upside all the way to this zone. No, I don't think so. If this is a W pattern, hold on, let me calculate the movement we expect. If this is a W pattern, this is the neckline to the head. So we expect the same movements from after the break to this side. So our expected push should come all the way to $97,000 if we get an entry from there. So we can trail that movement, that entry from $90,000 all the way to this side. This is possible during, we are getting closer to the election. Today is 14th January. So all this movement is possible to happen. So we have something that looks like head and shoulder pattern. If we see it happen on H4, we can take that entry again from $90,000 Bitcoin price. So the next, if you didn't enter Bitcoin, you can enter again until you see $90,000 pullback. Then you can join the entry. Anywhere from 90K, you can join an entry if you see a bullish engulfing on lower time frame H1 or M30. So this is a full analysis of Bitcoin done on the Naga platform. So it doesn't stop there. You can also enter here. If okay, my account is not funded, it's empty. You have insufficient. If my account was funded, I can choose my stop loss. You know, on TradingView, you cannot enter a trade. You cannot place a trade there. Let's say I have a position, I have an entry, I have a stop loss setting, I have a TP setting. You can, okay, your stop loss is 58274. Your entry is 90,000. Your take profit is 9763. You don't need to go to MT5. You don't need to go to MT4. You come here, input your stop loss. You come here, input your take profits. The moment you put it, you say in amount. Okay, you want to risk $5. You want to risk $5 stop loss. You want to risk $5 stop loss. Automatically, it's going to print out your take profit for you. You want to risk $5 stop loss. You want to, if stop loss amount can't be higher than 0 because of my balance, right? You put amount you want to risk. Then you also put what? Start short at current price. We're not shorting, no. We're buying, no. Short at specific rates. Lot size. You can choose your lot size 0.01. You can change this order to short at current price. Why is it short now? Anyway, you can buy and you can also sell. I want to buy. So if I was having money in my account, I would see all the full stuff. So I can buy, I can set my lot size. I can set also my investment based on how much I want to invest in that trade. But it's usually good to go with the smallest one, 0.01. If you have enough money, 0.02, depending on what you want, based on how much you have. Then you can set the stop loss, set the take profit, then execute the trade without going to MT5. That's my point. I'm saying here that you can set up your trade, execute the trade using just TradingView as your analysis without using MT5. This is a game changer. That's not all. Time will not permit me to go deeper, but I would like to round up with the copy trading. The copy trading is very crazy. It's a full class on its own that I need to show you when the time comes. It's crazy because I've not seen this type of copy before. This is you here with a $50 account inside your Naga account, $50. Go and explore this thing and tell you it's very, very crazy. I started studying it and I'm going to explore it myself too. And I'm going to show you the results. You can actually open this place and evaluate this guy. This guy is a trader probably with 12 months of experience consistently. This guy maybe probably 7 months. This guy probably maybe 9 months. This guy probably maybe 14 months on Naga platform. This is the account balance of this guy. Profit for copiers. Okay, profit for copiers. If you open this compartment, you could see his account balance. You could see his equity. You could see his trade. You could see his win rate. You could see his consistency. You could see all his number, his statistics. We will do that on another call to just evaluate who is a profitable trader that we should copy. So if you identify this trader after going through the first 4 you see on the list, there are as many of them. You can identify as many of them as possible. You can check so many traders and pick. But that is my, here the meat of the gist. I'm saying that you can decide to copy this guy with your $50. You can decide to copy this guy with your $50, 0.01. So this guy could be using a lot size 1.2 lots on his account, but it doesn't matter. Your own account, every time he places a trade, your own account will place the same trade, 0.01. When he closes his position, your account will also be closed, 0.01. And remember, this guy is a consistent trader for 12 months. You have investigated his results, and you think he's okay to copy him. At the same time, while you are copying this guy, you maybe refuse to copy this guy, you now copy this guy. You now use 0.02 to copy this other guy on the same $50 account. This is crazy. This is crazy. So you are using the skill of this guy to trade your $50. You are using the skill of this guy to trade your $50. Meanwhile, this guy will not accept to trade $50 for you normally because $50 is too small. And this guy may not be using 0.01. It cannot be using 0.01 because of his account size. This guy will never plan using 0.01 because of his account size. So, but because of what Naga has done here, you can copy this guy using 0.02, 0.01. You can copy a third trader, this one that have over 301 people copying him with $11,876 he made already in profit for people copying him. You can copy this guy with probably 0.03. So you have a $50 account where you are copying somebody with 0.01, you are copying somebody else 0.02, you are copying somebody else 0.03 on your $50 account. When this one is making profits, this one is making losses, the profit here is covering for the losses here, your account balance is okay. When the both of them are making losses, this one is making profit, the profit here is covering for the losses here, this one, the account balance is okay. When 3 of them are making profit at the same time, oh my goodness. Of course, they are great traders. Their results can show. So you will not choose a trader you don't like. If for any reason you don't like a trader's trade, after one day, after the second day, you can go there, simply click and suspend the trader. You won't be copying the trader again. But any trade you copy before from that trader, it will still be running and it will close automatic. A single click, you have copied this guy. A single click, you have copied this guy. A single click, you have copied this guy. A single click again, you have uncopied, suspended. Copy another new one. So every day you wake up in the morning, you can choose who to copy. Or you can choose them and leave them like that for 1 month. So this flexibility in social trading created by this system gives you an opportunity to become a master trader very soon. Trade with your $100 and people will be copying you from different parts of the world based on your performance. This is crazy. This is very, very crazy innovation I've seen in the history of social trading. So a mixture and understanding of different trading style and different trading performances is required by you if you want to be a copy follower. Then a consistency of daily, weekly, monthly, not profitability, but consistency. I mean, not large profits, but consistent profits. If you are making just 1% every week or 0.5% every week, and for a month, averagely, you are making 2%, 3% in a month. If you are consistent over 4 or 5 months, a lot of people from different parts of the world are looking for people like you. And they will easily find you because of this kind of platform that have been created here. They will easily find you. So time will not permit me to continue. I would like to have analyzed one of the trader. How do you say a trader is good? What do you watch out for to say this trader is good? How do you choose a trader you want to copy? When you go to the leaderboard and you see this trader is doing fine, oh, that trader is doing fine, how do you decide which trader you want to copy? Which trader, how do you decide which trader you want to copy? Of course, how to copy is a simple click and set your copy lot size or copy amount that you want to risk. So the last one, but not the least, is where you deposit. Here you can deposit through Fast Pay, Visa card, local bank transfer, Necteller, Skrill, fund with crypto, fund via bank transfer, wire transfer. My best method of deposit and withdrawal is fund with crypto because it's the fastest I've ever seen. Minimum is $10. Then followed by Kora Pay, Nigerian transfer for those of us in Nigeria, local bank transfer, this one. So you follow the prompt, you click, you make your deposits. And the same way you make your deposit, the same way you make your withdrawals. You withdraw either via bank card, or you have local bank account, or you have via e-wallet, or you have via crypto. It's all available. Then you can also transfer from where to where, from your Naga USD account, trading account, to your Naga, probably another account or wallet or whatever it is. Then history, then payment method, your bank account, then your credit card. Now, credit card, there is something Naga is trying to do also, which I want to share with you. We should talk about the academy, which is the card. I'll talk about the card next time. You have a trading card, a MasterCard, trading MasterCard. That MasterCard, you can spend your money without placing withdrawal. So I'll talk about it next time. The academy. I like to talk about the academy. Articles that you need to read as a trader. You don't just be reading any kind of book, or you don't just stay without reading. As a trader, articles are published here. You come here and read. And with time, you can also begin to upload your own articles too on Naga. Common words. The most common words for a Forex trader. You need to know it. A healthy vocabulary at hand. So you can read about this. This is a full article that you should read about. Number one, keep the wolves at bay. Traders say this a lot. What does it mean? How does it work? Want to swap? Swap is another important word that traders use a lot. If you keep going down, you'll be seeing several words. Pips, spread. So you read about these things in article created by other traders. So you can go here, check 5 candle patterns you should know. You can read about this. There are videos also. You can take your time. Not every day you are on TikTok and Instagram. Come and read about technical analysis. 13 videos are here. Watch videos about Forex basics, getting started, trading education, Naga web trader tutorials. You get to learn more. Webinars. I am currently attending the webinars for Naga. The last one I attended was the one they talk about copy trading. They taught us about copy trading. This particular webinar, the guy from South Africa was the one that hosted this webinar. I attended this webinar. It was nice webinar. His name is Jacunel. Jacunel is a famous for wowing people when trading. For him, the market is always a riddle that needs solving puzzle. Well, this is just about him. He wrote about himself, right? So you can copy somebody's write up about himself to do your own if you like. So this thing live now, copy and paste. Seminars. When Naga have seminars, they can also upload here. Then tutorials. These are tutorials that you can actually watch and learn. Ebooks ranging from popular bearish trading strategies, Japanese candlestick, 50 tips and tricks, technical analysis for all moving averages, the trading markets and fundamental analysis, asset classes, what markets are you interested in. So you can read these ebooks, you can download them. Glossary, this is talking about the words that are used in Forex trading. You can read them and their meaning. AMD, the alphabetic code which represents the national currency code of America, the American dirham. The American dirham. AM is the country code, and D is stand for drum. The domination of the American drum is 100 luma. Wow, I'm hearing this for the first time. So there are so many things you can get to see here under what's it called, glossary, and you can get to learn these words. Probably you can chat with Naga. There's an automatic chat system where you can chat with somebody from Naga to talk to you. Since the chat has been inactive for some time, I will close it for now. So please feel free to get back in touch when you are back online. I asked them a question and they gave me an answer from here. So you can chat with Naga online. Absolutely. Ladies and gentlemen, I was rushing because of time. We are 21 minutes behind time, but I took time today to go through a general summary of all we have done in the last 27 days. Tomorrow, I'll repeat the same thing. And I've given you enough and a lot of tools to start your journey as a trader. Even when you are practicing, you can also be making money. I've shown you how. Then also probably tomorrow, I'm going to talk a little bit around Cent account. Please, somebody remind me. I want to talk about cent accounts. As a new trader, you don't want to practice on a dollar account because you'll be required to deposit at least $5,000 as a new trader. And I'm sure a lot of you don't have $5,000. If you deposit $10, $20, $100, $50, the market will deal with you and you are correct. You will be right and the market will deal with you. It's like a situation where you ask a child to stop crying and you are beating the child and you are asking the child to stop crying. You're beating the child and you close his mouth, stop him from crying. That's what happens when a trader trades with $100, $500, $1,000 in the market. The market will deal with you even when you are correct because your stop loss cannot be far away because your money management has to be so tight. The money you make is so small. So it will force you to overtrade, over leverage, use wrong stop loss, enter at wrong time, impatient. So if you use cent account instead of demo account, I discourage the use of demo account. I'm going to show you examples, how to set up a cent account, how you use it. Example from my phone, I've been on a trade on gold. The trade is not going in my favor, but because that trade is in a cent account, I have no worries because I know no matter what happens on that position, it was Agaracha must come back home. It's still within that trading zone of H4. So it will dance and dance and dance and dance and continue the journey on H4. It's a gold trade. Apart from this, I have also another typical example of an algorithmic system. I've been observing it for 3 months. It's using cent account following the same model. And the patient is making that algorithm to continue to milk this market. So I will emphasize a lot about cent account, the use of cent account for beginner traders tomorrow as we begin to round up. Please and please, if you have questions, do not hesitate to send the question into the WhatsApp groups. I would like to be seeing all those questions so it will form my decision for what we should talk about tomorrow. And if you have questions in any time we are on the call, do not hesitate to write the question from the beginning of the call so I can see it and attend to it during the call. Somebody is asking, they say the $10 challenge was not posted on the VIP page. I don't know what is the problem. After the trade was achieved that you posted on this page. Well, the $10 challenge has a dedicated WhatsApp group for it. If you have created your account with GTC Broker, you are supposed to join that WhatsApp group. Then apart from that WhatsApp group, the $10 challenge has a specific group where you can get your trading entry. So we call the trading group, it's a locked group. So there are 2 special groups dedicated for that purpose. So, and you know, I'm not the trader for that program. I only supported that program because of you. So you have the access to that program because of me. So you go in for that program, join that group, take the trade from that side. You can decide to copy the trade from there and post it in Traders Channel. It's your decision. It's all you are allowed to do that. So can we enter the new trade BTC? Now, this is a very wrong question. I cannot tell you what to enter and what not to enter. If you have a reason to enter a trade and you've done the analysis, you say, because of this reason, I want to enter this trade. I want to exit here. Very, very good. But by the time you start asking another person if you should enter a particular trade, you are not me. I'm not you. I shouldn't be telling you what to enter or what not to enter. Once I show you an idea, this is this, this is this. So it's left for you. Do you want to enter at a premium? You want to buy at premium or you want to wait and buy on discount? Have you seen a bullish engulfing? You are entering after a bullish engulfing. There should be a reason why you are entering. If you enter a trade and I ask you, why are you in this position? You should be able to look at the chart, look at 4 hours time frame or 30 minutes time frame or 1 hour time frame and tell me why you are in that position. And also, you should also be able to tell me that if this place is violated, I have to exit this trade. The direction has changed. And this is all that I have done today. If you go back to if you rewind this video and go back to the beginning, you will see what I said about the Bitcoin. You will see where I said the entry should be. So I am surprised if you can ask me this kind of question after that explanation. It means you need to watch more videos. More videos until you understand where we usually enter. Because it's the same. I've never changed the way I enter trade for the past 3 years. I've never changed. It's the same thing. There is no new candle pattern. There's no new candle analysis. There's no new structure in the market. all the structure are the same thing happening for more than 20 years. So why would I change strategy or change pattern, change reason why I entered it? I can only modify, but I cannot change it. It's the same reason why I enter trade. So just keep watching. You can't learn everything in one day, but you keep learning every now and then until you master it. So I think this is where we can stop for tonight. Our time is fast, 27 minutes past 8. Past 8, yeah, we're supposed to end by 8. So, but we have to end right now. So tomorrow we'll start again 7 p.m. Don't come late. Bring your question, gather your question, bring your question. Practice. Watch more videos, much more video. Even if I break your head and put everything I know and put all these Forex books inside your head, if you don't practice, you can never be a trader. It's not a crime if you are not a trader. I've also shown you what you can do to make money in the market without you being a trader. Affiliates, copy trading systems, then AI systems. You don't have to do anything. You just refer people, or you decide to set an account and copy several people that are doing very well. And then you'll be making money. You don't have to execute a trade by yourself. But you must be tricky, know how to select people, know how to analyze. This is a good trader, this is an aggressive trader, this is a bad trader. You should be able to do that. We'll also do that tomorrow together. We should be able to check who is a good trader, who's an aggressive trader, who's a low risk trader, who's not a good trader. Then we should also be able to talk about Cent account tomorrow. I think that is where we can, how far we can go with these 30 days. If there's any other thing, please let me know. My time is up.